And the world's not going to stand by anymore watching America slouch towards insolvency. Now they are punishing us. Foreign investors bailing out. Raising income tax is not the way out of this. In 2001 and again in 2003, President Bush cut individual tax rates. And what happened? Well, from 2004 until 2008, tax revenue increased from about $800 billion to almost $1.2 trillion. That blows away the liberal argument that tax cuts starve the government of revenue. They don't. When the economy prospers because of increased investment in consumer spending, tax revenues rise. On the GOP side, we need tax reform desperately in this country. We need to raise more revenue in smart ways. Perhaps a 1% national sales tax. That could raise close to $100 billion a year without hurting the economy. That money could fund Medicare. There are ways to get a deal done and make the country stronger in the process. Raising the income tax is not one of them. How about a flat tax? Summing up, the debt ceiling has to be raised, income taxes have to stay where they are, and government spending has to be cut dramatically. If those things do not happen, we are all in big trouble. We would assume if you were elected president that you would, lower taxes dramatically. Is that correct? You would lower taxes, right?
That is correct.
Right.
I would lower the top corporate tax rate, I would lower the personal rate, and I would also take the capital gains tax rate to zero.
Okay, no cap gains. So that would make, capitalists go real happy, right? But how you get the $14 trillion plus debt down when your revenue stream is going to drop, particularly with the cap gains? You're not going to get any money from that sector. How are you going to get the debt down?
That assumption, Bill, assumes static analysis. I'm assuming dynamic analysis, which means that if you lower taxes the right way, if you look at the decade of the 60s when Kennedy lowered taxes, if you look at the decade of the 80s when Reagan lowered taxes, for the decade, taxes went up over 50%. It will not take revenue out of the Treasury. Secondly, at the same time, you are increasing the growth in the economy. You are taking some hard cuts on spending. You have them going in the right direction.
All right, but look. The revenue enhancement came under President Bush. That's the most recent example in the 90s because the capital gains was cut to 15%. And people invested in the stock market, did well, and the revenue came in. You're saying you wouldn't take a dime from that. So revenue is going to go down. It's going to go down dramatically if you were president. Now you say, okay, I'm going to cut. Now you're going to have to cut unbelievably down to the bare bones to to bring that debt down.
But Bill, you have a major. I disagree with you on one of your assumptions. It is not going to bring down revenue. This is the myth that has been planted in the heads of a lot of people. I don't know where you're going to get the revenue from if you don't have cap gains coming in. Where is it going to come from? Bill, let's try this. When the capital gains rate is taken to zero, small businesses benefit the most. They put their money into small community banks who loan money to small investors. Big banks are not loaning money to small businesses.
Okay, but
this is why this economy is not growing.
Where is the federal cut from that? That's good for the folks. It's good for small business. Where's Washington's cut?
Washington's cut. Washington doesn't get a cut.
Okay.
Look, Bill,
I know it does, and that's what I'm saying, that your revenue stream is going to drop. All right, I got to go on to...
No, Bill, it's not going to drop.
All right, you disagree, and I'm just posing a question.
Not going to drop.
Okay. Just